Good evening, everyone, and welcome to this webinar on brokers for algo trading. We're trying to do an unbiased review of all the brokers that we see, and specifically on the with respect to the tradetron community. We've been getting a lot of requests from all of you guys to go into the nitty-gritties of which brokers are best and whatnot. The fact also is that we don't have any affiliates or sub brokerage with any brokers, so that enables us to give you a unbiased view of all the brokers. So with that, we'll start the presentation. A little bit brief about StrategyOne. We have multiple kind of strategies from ranging from positional buying under gamma. We have theta strategies, which are non-directional intraday strategies. They are multi-counter and single counter as well. And then we have zeta strategies, which are directional selling and positional directionally. And then there are plans to do intraday sellings strategies as well. And then we have delta strategies, which are positional future strategies. These all strategies that you see are on marketplace, and you can have an access to them. When we talk about trading algos via tradetron, why we do tradetron is because we essentially want some free automated trading, pain-free automated trading, which is what we use via live auto option. Many of you would know it, but some people who are new to tradetron might not know it. When we talk about what happens with algo trades is, we don't know the frequency of the orders. So many times the orders are placed and we don't know how many orders are placed. So we don't even look into the brokerage or how many orders are placed till the end of the day, and then we come to know, oh my god, these are many, or these many orders have been placed. So it's a very let's say surprising thing for a lot of people. So it's important to understand what are the costs associated with it, and there's always a requirement also to have a regular check so that there's no algo misfiring, and a tradetron account and broker account are in sync. More importantly, the choice of brokers plays a very important role in your profitability, because most of the algo trading will that you see, especially intraday algo trading, they would end up taking a lot of trades, and many people will when they start trading, they will trade at 1x or 1 multiplier. At that time, what happens is the number of trades are higher as compared to the value, and the brokerage is always as per order with most brokers. So what happens with that is that you might have when you're trying out an algo, you might feel the cost is too high, but as you increase the multiplier, the cost reduces. But eventually it is important to look into the profitability versus the cost. So if you cannot with algos, it's very difficult to choose a full service broker who's not having a discount plan. And as we put it this way, brokerage remains one of the very important costs, second to the capital allocation. So if you have a right capital allocation, you'll be profitable, but brokerage is also very important. There's another, the process that we'll use is how we'll start reviewing it is, we'll basically look into the categorization of full service brokers across, full service brokers, discount brokers, free brokers, or personal views on these brokers. We'll also look into what is the importance of having a second broker, why you should have a second broker, and look into things beyond UI, because all of us look into the UI before choosing a broker. So what are the aspects beyond UI that you should choose? Other thing is, why do people do brokerage alliances? And we've been asked this question many times. Why are you not having a brokerage alliance? So we wanted to explain what does the brokerage alliance means for the brokers, for the creators, for the users. Again, we'll answer this in detail, and in specific ways, where brokers increase charges or kind of initiate a fraud with consumers. This is what brokers do. I'm not talking about anything else here. See, it's not trying to sensationalize anything. Broker alliances are done for a specific purpose. It's a specific revenue stream that any business would have. So something that should not be taken in a different way altogether. So when we look into brokers, we just categorize. There's about 10 to 12 brokers that we put up. In fact, 12 brokers. These are top names. We have chosen this basis the kind of clients that we have, the consumers that we have on our algos. What are brokerages that they're doing? I'm sorry, this. Yeah. So we'll talk about there's Zerodha, ICICI Direct, IFL, Alice Blue, Finvicia, and Kotak. And then on the second slide we have got 5paisa, Paytm, Flat Trade, SAS, Online, Fires, and Duck. Among these brokers, most of these brokers are, even if they are full service brokers, they have a discount plan, or they have a zero brokerage plan. For example, Zero broker is a discount broker. They don't have any other plan. ICICI has a full service broker, but they do give you a discount plan under Neo with a payment of 299. IFL again is a full service broker which has a discount plan. They don't charge you anything upfront for it for that 20 rupees. And it's not a brokerage. This is basically the plan fee as such. In case of Alice Blue, it's a discount broker. There's no other plan fee that is there. With Finvicia, it's a zero broker, completely zero broker. Kotak, there's a zero intraday broker. They used to have a 999 rupees charge, which is no longer there. Then we look into API fees. None of the brokers have API fees here except Zerodha. Integration time. Now, this is very important for a lot of people because a lot of people are working and they don't get time to regenerate token. So basically, token is nothing but authorization that you do to your brokerage account via tradetron. That tradetron can trade on it. Now, there are many brokers who have got auto authentication, and some have got some kind of a OTP based or a login based or authorization. Now, when we talk about this, just 1 minute. Yeah. So when we talk about this, then we basically have like a TOTP authentication which Zerodha has, which is probably one of the most cumbersome authorization process because you need to have a third-party authenticator with you, and basis that I hope everyone is able to join. I think Vishal, okay. So guys are able to join. That's great. So when we talk about this, like the authentication, so Zerodha is the most complex. IFL and Alice Blue have a automatic authentication. So once you have connected the accounts, you don't need to do any authentication. In case of Finvicia, you have a daily authentication. You need to generate a token. So there's basically different ways of doing it. In Finvicia, you're generating a token. In Zerodha, you're doing a OTP basis authentication platform. Kotak is also auto authentication. Now, what about the UI and tools? Right. So I think the people are asking questions. Let me please explain what we are trying to say, and then we will explain what it is. Yeah. So when we talk about UI and tools, so I think so we have highlighted one thing. Anything that is in green is a very good thing from that particular broker. Anything that is in red is not a good thing from that broker. So you can see UI and tools, Zerodha is a top notch. Everyone loves it. All of us love it. It is a go-to charting tool for many people as well, including me. When we talk about ICICI, they've got very good web and mobile tools, but not as good as Zerodha. But they are quite functional, and a lot of people are used to those as well because ICICI Direct is a very old broker. When you talk about brokers like IFL, LSBU, they have decent tools, but more importantly, IFL has got variety of tools. They've got a place, they've got IFL Web, they've got TT Web, and they've got whatnot. It's actually very confusing. There's a lot of confusion in this, and something that I want to alert. Specifically, some issues that came up a few days back on IFL, people were really confused what to do. See, UI is required mostly for algo training when you want to do a manual override. That is when you require the UI, and you need to have a decent UI. If you don't have a decent UI, then you will end up having issues in terms of squaring off or acting when the algo is not acting properly. So that's something that is important. And when we talk about Alice Blue, again, it's good. The tools are good. They're using a software from TradeLab. The entire suite is from TradeLab, which is fine, which is good, and it's being used by other brokers as well. In case of Finvicia, the mobile and web tools are okay. They are, the panel update is quite fast. The ticks are very, very fast. But, there's a learning curve to it. It's a very different kind of a system. A lot of people don't like the interface. In case of Kotak also has a lot of tools, but they're synchronized. There, you will not find any issue with their old website, their new website. They've got an old website, they've got a new website, they've got a Neo mobile, they've got another mobile, web application. You'll hardly find any issues with that. And then again, there's a clutter of different interfaces here. So I've rated it as okay. It's still workable. Some of the interface looks like Zerodha, and so it's very inspired from Zerodha in that sense. The other important thing is the strike limitation. Now, what happens is that a lot of times, OTM strikes are not allowed by brokers. This is not something to do with a broker specifically putting a restriction. It is basically basis what the exchange allows them to have a percentage of the outstanding. So let's say if a particular strike has got 10,000 lots, Zerodha cannot have more than 25% lots from there as a broker. That's the limitation that is there on the OTM strikes. And that's why OTM strikes are limited. So Zerodha is always limited because it has the highest base. If you keep on trading with Zerodha, you will not have access to OTM strikes unless you do a specific kind of account with Zerodha, which is to have an account with another broker which Zerodha has, but with the same Zerodha interface. So that's something that a lot of people try and do. ICICI Direct, IFL, Finvicia generally don't have any issues with any of the strikes. LS Blue, I have noticed something that some liquid strikes are not allowed. ITM strikes are not allowed. Specifically, next week ITM strikes. And in Kotak also has a OTM strike limit, but it is not wide as 0. So Kotak, you'll have an OTM strike limit of about 20 strikes, 20 steps. So basically about 2,000 points in Bank Nifty from the spot. The next part is the API and behavior speed. So I'm taking some time in introducing all these headers. When we go to the next slide, I will not be talking about these headers anymore. The API is stable and for Zerodha, but at times personally I've seen it being a bit slow these days because the load is too much. Similarly with ICICI Direct, a lot of people have complained that it is at times a bit slow, but otherwise it's fine. IFL again stable, but has got many outages in the last few weeks that we've been looking into it. Alice Blue for it's one of the most stable APIs. Hardly or rarely you will have any issues. I think we always also look into reliability in terms of if the orders is punched and if there's an error, the error should reflect onto TT. In many cases, specifically in case of Kotak, what happens is you will have an error reflecting, but the order would be executed. But that's something that doesn't happen with LS Blue and Finvicia, at least for me. It has happened even in Zerodha for me. But it has never happened with LS Blue and Finvicia for me. I've not used IFL, so I cannot comment on that. But Kotak is a really, really, arbitrary platform. Sometimes it will execute fast, sometimes it will execute fine, sometimes it will not. People talk about Finvicia being a zero broker and maybe not as good, but in my personal experience, most of my capital is with Finvicia. There's nothing to worry about in Finvicia. Perhaps the most stable API. I don't even need to look into the broker page even once. And that's the advantage that I have because I want to do automated trading. I want to do free trading, very free trading. And that Finvicia gives me. It's very surprising, even having zero brokerage, they do it. So, kudos to them for that. When you look into the brokerage plans, Zerodha has a flat, 20 rupees per order brokerage plan. ICS has got something very nice, which is a, zero brokerage on futures under this Neo plan. Something that, if you're doing future trading, it should help you a lot. IFL ideally is 20 rupees per order, but a lot of brokers, sub brokers, and alliances are giving you 3 to 5 rupees per lot, which is good for people who are starting up. Similarly, LS Blue is 15 rupees, and they also offer a 5 rupees per lot, for a lot of starter people who are starting up and deploying 1x and those kind of things. Um, in case of IFL, as far as I know, that even if you place more than 4 orders or 5 lots, you will be charged 20 rupees per order. I don't know if the same case stays with Alice Blue. That if you do multiple lots, then your charge remains 15 or not. I don't know that, so I've not mentioned specifically on this part. Finmisha is of course free, completely free. Kotak is very interesting. It's 0 rupees for intraday, while overnight is 20 rupees per order. Their equity brokerage is way too high. It's 0.25%. Really not recommended to do any equity trade over there. For delivery, intraday will not be charged anything on that, but equity, is a straight no. The other taxes are generally, the standard fees. There might be a small up and down here and there. IFL claims to have 25% less fees. I mean, this is a claim. I don't know. I'm not verified it. What is the reason for it? But they claim to have a low fee, so that's something that people should look into. The other thing is Alice Blue CMM charges. Clearing member charges are very intransparent. They change. They charge from 3 to 15 rupees per lot. Specifically, this happened in March, and many of my creator friends, stopped trading themselves into Alice Blue just because of that. Because the CMM charges were too high. So that's something which is wrong with Alice Blue. I'll share some other facts on that later on. The other part is margin. So margin requirements are standard. The only difference is everyone wants 50-50 for carryover, except Finvisha, which charges for intraday as well. So 50% has to be in cash. That's for Finvisha. Kotak also has the same thing. Kotak has a separate thing. They will actually allow you to use the margin for buying, your options as well. But they will charge an interest, if it is above a certain percentage. The other thing is what is the margin requirement? So Finvisha actually has about 10% extra margin than any other broker. That's something that you need to be worried, alert about. So if someone is charging 1.5 lakh rupees for a straddle, Zerodha is charging that, then your Finvisha will charge you 1.65 mostly. So that's something that you need to be careful about. Then the next is shared margin between segments. So one thing which I clearly know is Zerodha, you have to have different margin for commodity and different margin for equity. Same case with ICICI, IFL. I'm told that that is not required and it is common. And Alice Blue as well, I have been told this is common. Finvisha is common. Kotak is not common. So Kotak we will have to add it separately. Or in fact, the transfer between the segments is allowed, but you have to add separately. Once you transfer between the segments, then you can use it. But Finvisha, you don't need to do any transfer at all. And the same case is with Alice Blue and IFL, as far as I understand. So, anyone has got any questions here on these brokers? If you have any questions, you can raise your hands or unmute yourself. So I saw some questions. So how much par OPM? Just 1 second. So I'm just taking some questions. Kotak has not combined equity and commodity. Yeah, so I have mentioned it. So it's not combined equity and commodity. So they don't have a shared margin. How far OTM is provided by Zerodha? So, Mr. Solanki, Zerodha has a page where you can actually see what are the strikes that they are going to allow for today or for this. Sometimes, they allow only 300 plus minus. Sometimes they allow 1000 plus minus for Bank Nifty. So this is very arbitrary, and you will not you have to actually follow through on that. So Mr. Solanki is also asking which is the best amongst Zero, the Alice Blue, and Finmacia. So I think we are not in a place to suggest which is the best. We use a broker which is Finmacia. Some of us used to. I mean, I'm talking about the team at StrategyOne. We used to use Alice Blue. We stopped it. We are using Finmacia mostly. I'm using SAS, and I've started using Duck as well separately. But we are choosing this thing because we feel that these are the best brokers, not looking into any other thing apart from the performance of the API. See, we want worry-free trading, and that's what we're getting with these brokers. So that's what we wanted to put up. So if there are no more questions, then I can switch to the next slide. Okay. Right. So then we have got some other brokers as well. Brokers like 5paisa, Paytm, Flat Trade, SAS Online, and Fires and Duck by Janet. When you look into these brokers, again, most of them are discount brokers, and then there's a different category of brokers that we are talking about in this slide, which have flat fee. So that flat fee basis that flat fee, they don't have any other brokerage that you have to pay, but they come with some limitations, some conditions here. So when we talk about we'll talk about 5paisa as such. General discount broker, probably one of the oldest discount broker, even older than Zerodha. They have daily authentication. Their app is good. It's a stable platform. At times, people have said they are slow. Their brokerage is 20 rupees. Their margins and everything are standard. There's not much difference over here. In case of Paytm, again a discount broker. Paytm is quite new to this game. Their tools are good. Their website and interface is very, very good. There is a small learning curve that you require, but after that it should be okay. They have a stable API as they claim, and they do. The API is new, but they do seem to be looking into Paytm as a broker for choice of broker for algo trading as such. There's a guy from Paytm who comes regularly on the TT forum as well, and they've been saying they've been doing quite a few things. So that's something that you can look into. One good thing that I found out in this yesterday only is that they have a thing to deauthorize an algo app like a tradetron immediately from Paytm itself, Paytm app itself. So that's very interesting. When you have an issue with tradetron, you can actually deauthorize the tradetron app, and tradetron will not do any orders. So that's something very, very nice that I could see. And if other brokers also do it, that will be great. Another problem with Paytm is although they have a sorry, there's no 0 rupees for future. I made a mistake here. Yeah, so Zerodha, I have not seen it recently. They might have a revoke option, but still, the point is the authentication happens, and there's a confusion. There was a discussion a few days back that just 1 second. Sorry, I had my kids around, so I had to just pause it for a second. So when we talk about the Paytm, the issue is with the order level margin benefits are not there by default. So what basically happens is that when we place a straddle, when we put a call strike sell and a put strike sell, ideally, let's say for a bank nifty, we will have a 1.5, 1.6 lakh rupees ka requirement. But when you do an individual call sell, it might be 2 lakh rupees. Now, what happens is when we place an order together, we get an order level margin benefit because you place a call and put together sold, right? So that comes in with most brokers, but not with Paytm. They had put up something a few days back that you can request for it specifically, but that is not there by default, which is there with most brokers. Then there's a broker called Flat Trade. Zerodha also doesn't have a shared margin as far as I know between segments, but if it is there, you can correct me. Flat Trade is also a zero broker just like Finvision, so it's exact copy of Finvision. The entire interface, their API, everything is a copy of Finvision. Their API is stable as well, but on and off there have been more some issues over there, at least more than Finvision on that. But it is exactly the same offering as Finvision, and as far as I know, they don't have a intraday requirement of 50-50 for cash and pledged brokerage. They also have a shared margin between them. Then the third, the fourth comes SaaS Online, a broker that I use extensively. Again, a discount broker. They have a flat fee of 999 rupees per month. API is free, daily authentication. Interface is exactly like LS Blue. They are using this particular software from TradeLab. The entire suite is from TradeLab, so it's exactly same interface. If someone has used Alice Blue, they will not be surprised with the kind of ease you have. Again, very good performance of the API. The biggest issue here is sometimes the login from web or mobile can make the TT session invalid. So that's an issue with SaaS. That's something that you need to be aware of. How I try and bypass this issue is that once I've checked on the website or on the app, I'll regenerate a token. Otherwise, within 15 minutes, it will get logged out automatically. This is something that SaaS can solve it themselves. I have raised a request from my end, but no response that I've got on that. It's a RMS thing. Maybe they don't want to have multiple sessions so that the session authentication remains same and they can manage it. So someone is asking was sorry. Yeah. So that's there. The other problem is that there is an issue with illiquid strikes. So what I mean by liquid is not really liquid in that sense, but we're talking about ITM strikes. At times when you want to buy ATM options, for a strategy, you might not be able to do it with SaaS. So that has happened with me in the past. SaaS also has a 9 rupees per order plan or a 999 rupees per month. This is 999 rupees per segment. So when you do currency, there's another charge of 499. When you do MCX, there's a charge of 3,000 rupees. So they have a fixed charge per segment. The other problem that they have is that for using this plan that you have with a flat brokerage, you have to have 100% as cash. If you pledge, you will not be able to use this plan. So that's something that you need to be aware of. Then the next is Fires, again, a very popular broker, discount broker. They have a very good app and mobile technologies over there. They have got a very good integration with TradingView as well. Someone who's using TradingView extensively for their manual trading, they can use it. The API is supposedly stable as well, and the brokerage plan is also rupees 20. I understand that they do have CM charges as well, but I don't have much more details on that because I did not, I have not traded with them. So whatever I could get as information, I've tried to gather. So that's something that is there. Again, the other requirements are standard. Duck by Genim is a new broker or a old existing broker. Genim is a very old name as well, but they have come up with this deep discount with Duck, and I have personally opened an account recently. They have similar interface to exactly same interface to Alice Blue. The API is stable, performance stable, brokerage zero. Is a flat fee for $14.99. But then there's an issue that I found out. So basically, most of the free brokers you'll see have something or the other with the margin. They want you to have more margin. They would want you to have more cash in the account. Similarly, they have something which is very strange. So they will not give you the credit of the sales that you've done on the same day. It will not be included in the available margin. You will be allowed to trade with it, but it will not be included in the available margin. What does that mean is that you will be charged a peak margin penalty if your account is not having the sufficient buffer. And that's what happened with me on my second day. I've raised it up with them. I've put it actually on Twitter as well, because very unlikely that you should have something like that, because as per SEBI, 80% should be allowed to trade on the same day. So if you allowed me to trade on the same day, you cannot charge me a peak margin penalty because you have allowed me to trade, and you've not just because you've not included in the available margin. That's your fault. That's not my fault. So that's there. The other good thing with them is that shared margin is across segments, on by duck. But this is something which is a red flag, and I wanted to highlight, and I have some things to share on this. Any questions on this? I can take up right now. Otherwise, we can go on to the other part of the presentation.
Vishal, Vimal here.
Yes, NXG.
Yeah, Vishal, this is Vimal here. So my question is, when you talk about cash margin, right? Would we be able to pledge something like liquid Bs, and it is considered as cash margin, or it's strictly cash?
Yeah. In case of SAS, anything that you pledge, even if liquid Bs, they will not allow you to use that plan. Right? It has to be clean cash. In case of other brokers, all other brokers that I've mentioned here, anything liquid Bs or liquid fund or overnight fund, whatever whatever liquid funds are there, that will be considered as cash component.
Yeah, thanks for that.
So you don't need to keep cash specifically for that, but it will be considered as cash component. And this is specifically for option selling, but for option buying, you need to have cash which can be debited from your account.
Right.
So that's the difference between these three.
Thanks. This explains a lot.
Anyone else has got any questions? Yeah, so Sher Khan, I've not checked Sher Khan just because, the brokerage is just too high. It is not recommended at all. They have this, they have got a discount plan, and I don't know how's the performance of that API, but they do have a discount service option as well. I've not checked it. Mr. Solanki is using Sher Khan, so API is very stable, is what he's saying. Right. Okay. So I think no more questions. So we'll just go to the next part. So why do we need to have a second broker? See, I mean, all the online broking that we have is dependent on tech. There will be glitches, there will be failure, that will definitely be there. And also do understand that many brokers do allow you to call and trade to manage your positions. All these online brokers do that. And there is no queue in that. However, what happens is with most of the brokers, what will happen is that there'll be sometimes when there's an error, all the helplines might not be available, although they say that they are without queues. So they might not be available. So you'll not be able to solve that error. But when you have a second broker, you can actually create opposite positions in that broker that will help you to, solve that issue that you might have in access to that broker. If there's an exchange issue, everything will be gone. But if it is a broker specific issue, then you should do. And when you do that, you should try and have a separate type of a, API or tech provider. Like, we talked about SAS, Alice Blue, and Duck having same Trade Lab API. If there is there might be a problem specific to Alice Blue as well at times. But generally, if there's a problem with the API supplier, so, you'll have an issue over there rather than that. For example, something like, IFL and Composite Edge. So there was a discussion with someone, and someone was saying, "Why don't you look into composite hedge?" Both have a same, provider as XTS as a API provider. So if there's a problem with XTS, and you have both the both the brokerages are with XTS, you can't manage your position at all. So that's why you need to have another broker, second broker, in fact second or third broker as well, where you can have this thing. You can have a third, a broker like ICICI, which has a own in-house API, or as Zerodha or Paytm, which has an in-house API. So that again helps you a lot in these kind of things. Then essentially, what we are trying to do is we are mitigating the challenge of this different API different APIs having issues. The other point is that it also is that happens is that some brokers will change charge, increase charges randomly, and you can actually check that via the comparing the contract notes and those kind of things. Specific to Alice Blue, I was talking about on TT Group, and I'll share more here as well. So that's something that is the importance of second broker. Apart from, again, in one sense, hedge to, or let's say, separating out your algo trading and discretionary trading. That also you should try and do with the second or third broker. So that's with the brokers, and then the thing which comes in, which is much more hot topic as such, brokerage alliances. See, I think first let's talk about what the brokerage alliance is. Some creators would offer you sub brokerage via brokerage alliances that they have. This is essentially a win-win for both subscribers who are normally paying a brokerage anyways, but they get a discount on the profit sharing with the creator. They also tend to get sometimes special rates, like IFL does. Normally it does 20 rupees per order, but with some creators that they do 5 rupees or 3 or 5 rupees per lot, right? It is a win-win for people who are choosing, paid brokerage plans. But those who are using free brokerage plans, they may not get advantage from it unless your capital is too high. Unless your capital is too high and you're deploying, tens of crores of rupees, or even a crore rupee with a particular creator, your brokerage will be much less than your revenue sharing or profit sharing that you will do with them. Another thing that people talk about is with brokerage alliances, they say, this broker is very good, there's less slippage and this thing. Let's talk about it. Slippage is because of bid-ask spread, latency, volatility, and movement in the market. And the last comes in as a broker. So it's not that, just because of a broker, there is a slippage. There are many other factors to it. So within the same broker, you will have different, P&Ls as well. Sometimes it will be good, sometimes it will be bad. So this is something which, I think a lot of people have done analysis on different forums as well. And there's nothing that relates to broker. But when people, talk about, choosing a paid broker versus a free broker, they give this as a reason. Slippage always will remain different as per different deployments within, let's say, a free broker or a paid broker. Now, what the creators, for what it is for the creators, the brokers, I mean, for brokers, it's very clear they get more subscribers and they increase their base, which is what every broker is trying to do these days. That's why you have got a 5 rupee plan and 3 rupee plan, because they want to show that number. But for creators, this is something which generates a fixed lifetime income. Someone has opened an account with a broker with them, they will generally not close the account. That account cannot be transferred to another sub broker. This is probably one of the oldest model via which people have been generating income via brokerages. Not only creators, you talk about YouTube influencers, you talk about even the guy who's selling mutual funds next to you. This guy is also getting a commission from the mutual funds or the brokerages. It's one of the most oldest thing, and then you keep on getting this. It's a lucrative income stream, which is a lifetime one. But then it comes with a share of headaches as well. This is completely a revenue stream. Do understand that. It is not someone is trying to give you a discount to it because of it. It's actually you're getting a revenue out of it. And that's why you're getting a discount or you're getting an incentive to use it. But for some people, it might be worth it. Some people, it might not be worth it. That's how the brokerage alliances are. The other question is, why are we not having a broker alliance, or when we will have a alliance? So we don't have a plan of doing any alliance. We believe that free brokers are here to stay, and they will be getting more clients because of the services that they are offering. They are primarily relying on algo trading, on high frequency trading as such. So they will sustain this thing. They will have exchange incentives and ancillary income via other services that say sellers, or keeping the cash, like SaaS does, like keeping the cash. So they will be putting that against to get a credit for themselves, or get uh, getting let's say interest income out of them, whatever. There could be many of these things. um, Sub brokerage is not possible on a free broker. So if we are ourselves using a free broker, and how can we offer sub brokerage? Let's be clear, because there's no revenue that we'll earn. So why do we need to get into that? If we don't earn any revenue, you will not get any discount as well, right? So why do we need to have an alliance? It's better that we remain independent. We tell you to use a broker that you want to use, and we tell you things as per facts. So if there's a broker like LS Blue which is doing fantastic on API, if you're happy to look into their charges, fine, go ahead. But I am not going to offer you LS Blue just because that's a revenue stream that I want to have. No, that's not how we would want to run as a company. We are concentrating on profit sharing. We believe that when you make money, we should be getting a share of it. That's the least and the most of our expectation. We may do alliances for managing customer accounts, which would be required because once there's an error, or once you have to exit out something, then it becomes easier to manage those multiple accounts that are there. And then over there we will charge, normally we charge an extra fee which you might not charge if we do that. But that's still far. We are still not doing it. So currently there is no plan to have any alliance or sub brokerage. In future there may be, only for clients whose accounts we are managing. To that we come to some specific ways where brokerages do frauds, or let's say cheat customers. Clearing member charges. So clearing member has an eligibility requirement, a net worth of 3 crores, right, and a deposit of 50 lakhs. Now there's not a big deal for a broker like LS Blue. It's a big broker. Why are they doing that? Why are they not having a clearing themselves? They have to answer them, for themselves. Why are they not doing it? Because they're leaving hefty charges. I calculated, sometime in March it was 7 to 8 rupees. It went to 10 to 15 rupees as well on some of the days when the premiums were too high. So this is something which is very arbitrary, and even if some brokers, I think I was highlighted that SAS is charging it. It's a percentage, it's 0.06 percentage, right? Even that is clear and transparent and visible to you. But some brokers don't do it transparently, and that's really something that you should avoid. I mean, although however good Alice Blue is in terms of API and everything, CM charges. It's very simple here. I mean, March, my revenue target is not met. I'll just increase the CM charges. No one will know. I'll increase my revenue. If someone is having a deposit of 50 lakhs to NSE, and net worth would definitely be 3 crores. A big broker will definitely have a 3 crore net worth. Otherwise, how will people trade on them? How will HNIs trade with them? They will not. And if you have a deposit of 50 lakh rupees, what is the interest that you pay on that? You lose out on interest on that. Nah? That might be 1%. That's nothing. And if you charge that as well, many people have been, if I was doing this business, I would rather, in case of, if I was Alice Blue, I'll actually open a sister concern, which will only do the clearing member and actually earn money out of it. Because, the interest charge will be minimum. That will, not increase much. Let's say for adding a trading member, it's only 10 lakh rupees. So maybe 60 lakh rupees. And then I will just keep on charging it to my customers. They don't look into it. It becomes as part of a charge, exchange charge. They just ignore it, and then they pay it. See, whenever you see a charge, you feel it is being charged by exchange, or they will talk about. And this has happened as well. Customer service has told me that this is a charge that is being levied. It's a statutory charge. But when you go into detail, then they will be with their pants down. So this is something which we have to be very, very aware of. Other brokers will also do it, but we need to be aware what are these charges, and it has to be clear, it has to be transparent. You need to be understanding what these charges are. Second is this margin allocation. This is something that I talked about specifically in January. And you can see here they and SAS, they use both the same platforms, with the Trade Plus, but they have second some types of different kind of categorization. And this is something which got me very interested on Friday, because I had bought options on Thursday, which I sold Friday morning before I did any trade. And yeah, so it was right. So just one minute, yeah. So this is what happened over there. And what I saw was that my options that I sold, they were given as an option credit for sale. 44,000, 50,000 rupees, 45,000 rupees were there. And then I had an opening balance of 1 lakh rupees. So that the total available margin by normal convention should have been that, because I did not have any position, right? They did not do that. They put that separately and they said, that is not there. Okay. And that was when there was no position, right? So in case of SAS, you can see that I have positions for this 7.5 lakh rupees. So that's why my available margin is less. In case of Alice, in case of Duck, the margin available was 1 lakh rupees. And then there was this additional margin in option credit. So they allowed me to trade. I'd put up a straddle. It was, I'd put up a hedge as well. So it was taking 1.3 lakh rupees. So they allowed me to trade. But at the end of the day, I get a margin shortfall. And again, that 30,000 amount. And the reason that they gave is that the amount is less and, you do not have. And I have raised it with them. But I'm yet to get an answer. I had a chat with them today in the morning as well. Yet to get an answer. But this is something that could be customized in their RMS software. This is very strange in the way they are doing it. If 80% is available after selling, they are not providing it, or they are providing it but not putting that as available margin, so that when the screenshot is captured, then you charge a penalty. And this penalty, of course, it doesn't go to the exchange; it goes to them. They don't pay it to the exchange. So this is again another type of fraud which these guys are doing. I have put it on them on Twitter, and I'll update you guys, because we were talking about this broker on the group. So I'll update you guys what happens with this broker. But red flag has come, so just be aware. With that, I will end my presentation. We can take more questions. That are there. You can raise your hand. You can ask your questions. Anyone has any questions? Hello. So I don't see any questions. Can we call it a day then? Someone wants to ask a question, they need to raise their hand or unmute themselves. So I don't see any questions being raised. So I think with that, I'd like to thank you all for joining in on this webinar and getting this information. Thank you all for coming here, and spread this information to amongst your friends. It should help them. Thank you. Have a good evening. Bye.